Greetings. So let's get a quick market analysis in for the foreign exchange markets. Coming into this week, we are going to be allowing our stock swing trades to stay where they are. They've been up quite a lot coming into the beginning of this year. So there's no reason to touch or change them. I closed one position that was down a good enough percentage of points for me to not want to get back in after a slight pullback to the upside. In terms of the crypto markets, the choices that I've been in for the past couple of months are also doing very well. So in terms of swing trading, they're all doing swell. In terms of our actual day trading, our active trading, it's all in the foreign exchange market. So we're going to be trading our prop firm account, continuing to do so this week. And that's going to be, we'll see how that's going to be. I don't know quite yet. I don't know how it's going to be quite yet. Anyway, I've got a few options down here, a few choices, a few prime choices that I'm thinking are going to be it for this week. As you can see, first we've got Euro GBP. To me, it's in a pretty clear downtrend. Let's put the proper indicator on here. For me, Euro GBP is in a pretty clear downtrend. I mean, you're going to be able to range trade it, right? If we get a return to the top of the volume profile, or we get return to these levels of resistance up here, I can fade it down and short it down. But there might be an opportunity for a genuine, just immediate short coming into the week. And of course, it started already. The trend has started pushing down already. It's Sunday, so the markets are open. But that doesn't really count. We aren't taking trades on Sunday. There's no volume. Anything can happen, and everything's too slow. So as of right now, there are no opportunities on this. But I definitely think that this week, with such a clear trend coming down, we're going to make some money on Euro GBP going down. I'm going to show you the other ones that I have chosen already, and then we'll look at the ones that I don't have chosen. Now, I guess I'll give reasons as to why I won't be trading those this week, or I'm not interested, at least as of right now. Of course, anything can change. If an opportunity pops up in one of those pairs, we'll happily get into it. We'll happily acquire that alpha. Anyway, GBP JPY is next. It's in a pretty consistent sideways movement, or at least it has been pretty consistent consolidation, ranging markets since the beginning of the year, pretty much. Let's go to the 4-hour. See why I had this one chosen. Okay, that's why I had this one chosen. So even with it consolidating, right? If it's going to continue to consolidate and go sideways, but it's in this humongous uptrend on the 4-hour, on the daily, on the weekly, then all I have to do is support that larger trend, the trend that's going up, and take advantage of any times that it dips. So purchases, buys at any point during this would have netted profit and wouldn't have given me a large enough of a drawdown to build a prop firm account. So I think that, as long as it continues to push on up, and even if it does do a nice pullback, because we see all this liquidity it has to return to, but even if it pulls back, we will have enough room to survive that, especially considering the reward on the table comparative to the potential risk. It would have to go against all these days of trending. It would have to go against all these days of continuing to push up. This trend that has existed since May of last year, it would have to reject all of that and start heading down in order to absolutely kill us in this position, or at least go against our premise. Of course, we can be right on the direction and wrong with the time. Timing is absolutely everything. So it's not to say that this is going to be an absolute AAA trading opportunity for the entire week, but there's definitely going to be some opportunities to make money. I mean, the trend is very, very clear. In Euro JPY, on to other news. We've got another, consolidating pair, but again, it's the beginning of the year, so we're seeing the trends in all of these pairs, right? And it's been consolidating for the past, week plus, few days for some of them, 2 days for some of them, but that's understandable. It's the beginning of the year. A lot of people are still on holidays. Some professionals haven't even returned to their jobs yet, so I can't expect the markets to be going absolutely crazy. 15-minute, nothing but consolidation. We saw on the 1 hour a good chunk of consolidation for the past few days, and we're currently at the bottom. We're touching the bottom of that consolidation, so I'm expecting the support to hold, meaning that there should be a buying opportunity down here, so we can start heading back on up into that direction. Now, in terms of my confidence in that, or my conviction, it's not as high as the other trades, because we have this higher high, lower high, and then this lower high, or you could say that that's a double top. Either way, these aren't good signs for what we want. Of course, looking at this, we could say that's normal market movement. It's just necessary structure, necessary accumulation before it boosts up, and it hits off of the bottom of this volume profile, and has to go back up to try and find higher liquidity, which exists within this consolidation at the moment. But that seems like a temporary opportunity. That doesn't seem like something that I'd be actively in for the entire week. It doesn't seem like something that's worth betting the house on, something that's worth acting as if it's the only opportunity currently existing. To simplify what I'm saying, it's an opportunity, but it's not our best opportunity. It's going to take a very specific circumstance, very specific market structure, value movement, some other indicators for me to want to hop into this. It's not urgent. Next, on to GBP CAD. And how long has this video been going on? Let me see. 6 minutes. That's long enough. You don't need to look at the pairs I'm not going to trade. I'm not going to trade them anyway. And if I do, I think throughout this week, I'm going to upload videos of me actually trading on the trades that I'm actually going to take. A little bit of accountability for myself, a little bit showing everybody else what's going on. Anyway, GBP CAD, let me see what I saw in this because I'm not seeing it currently. Okay, since November, it's been consolidating. Okay, so that's very, very, very consistent movement, right? If I told you right now that this thing would go up tomorrow by 2 points, then you have one of two options. One of them is going to make you money, one of them's not. And within this range, although it might look more complicated than a trend, then generally speaking, throughout this range, it has done one of two things once it has hit or been near, we'll say, these lines of support and resistance. And of course, these are incredibly uneven, right? It's a zone. It's always a zone. I don't even know why I'm using a line. It's just because mentally I see this as being a zone. I see it as being a square rather than just a line. But if consistently hitting these zones, right, it has rejected and gone in the other direction, then we can be pretty confident when it does get close to or hits one of these zones that it will go in either of those directions. And as of right now, I feel like this was a part of that zone and it's heading on up. Maybe there's going to be a squeeze and finally a break on down. But since, October? Why is this in my way? Yeah, since November, October, it has just been going to the right. So I don't expect that to change. I don't expect there to be some magical development over there in Europe, over there where they're using them GBPs, or in Canada. I don't expect them to develop or find a humongous new maple syrup vein within this next week that's going to make their currency just explode and is going to crazily affect the price of these two currencies. From my understanding, Canada's been going through it since, the involvement with US tariffs, and GBP, it doesn't seem like anything that they've been doing has been working in particular. So both of these currencies are equally as weak. And I'm saying that while the GBP, I'm pretty sure, has returned to being worth more than the US dollar. But I'm not expecting either of them to have extreme volatility this week. Like, I don't expect there to be humongous swings in their currency. I don't know anything, or I'm not aware of anything that's happened within, the past couple of weeks that should justify a huge swing in their currency. And with that being said, in order to verify and make sure that that's the case, we are going to go over to Forex Factory. Oh my gosh, I disappeared. I forget with this VTuber, I can't put my hand in my face. There's also this weird thing it does where it keeps making me wink. Anyway, there's a lot of stuff to figure out. It's the beginning of the year. This is a new thing. Anyway. Today's the 4th. I'll be up until the morning. Tomorrow, January. Of course, USD, ISM, manufacturing, PMI. The only red thing for the day. This should get the markets moving. I might not want to be in going into that. It's much easier, and it's much better to trade immediately after the news has happened than risk a trade going against you, even if you're a little bit of money in profit, while you're in a trade and the news event happens. Like, it's just common sense. We'll react to the news event rather than being reactive, which sounds counterintuitive, right? But we're going to have more power. We'll have the power to buy, sell, or not do anything versus having only the ability to just exit our position if we were already in it. It gives us more control, not having a trade going into news. So I think I'm going to be up for this. I'll try to stay up for this 9 a.m. That should be a good trade to start off the week, if nothing else. And the rest of this, a bunch of GBP news. We were just talking about that, but none of it seems to be major. Let's check out the rest of the week. AUD, it's got some good news on Tuesday. Wednesday, more USD stuff. I'm looking for other pairs, honestly. Thursday, USD has employment claims, and USD has unemployment rate, average hourly earnings, non-farm employment change, unemployment rate. So 7:30 a.m. on Friday is going to be wild. It's going to be big. And then 9 a.m. has USD prelim UOM consumer sentiment and prelim UOM inflation expectations. Okay. So that's about it. The indicator I'm using here is the Ishimoku Cloud plus the volume profile. Ishimoku Cloud, Japanese technique. This is the thing that I've become adjusted to, and I just love it. It makes a lot of sense. One of my favorite YouTubers uses it also. He became my favorite YouTuber because he uses it, actually. And again, we can check out these other opportunities, right? Gold is continuing to bellow on up. Matter of fact, looking at gold, there's definitely an opportunity to buy because it's definitely, back in trending phase. So I'm actually going to move that down. I'm going to promote that to a potential trade going into next week. But for Euro USD, it's heading down, and I don't know if this is actually going to be it heading down. I definitely don't want to fade something like this, though. I don't want to go against such a strong trend, a trend that's been developed for all these hours leading up to now. If anything, I'd have to jump on the bandwagon, and of course, I could open this up and see a perfect trade and just not be able to deny wanting to get into it, hop in. But as of right now, no, that's not the case. USD CHF, we've got large spreads, a general trend for years. Literally since I've been born, this thing has been trending in a very specific direction. But there's a lot of consolidation, and there are very large swings within USD CHF, not to mention, like I said, very large spreads. So it's very particular situations where I'd want to actually get into USD CHF, but I like it as a whole. I like the Swedish francs as a currency. Once I escape the US, a lot of my money will be held in Swedish francs rather than the US dollar because of how it retains its value. Anyway, USD CAD. I think we're already looking at a CAD pair. Yeah, we're looking at GBP CAD, so there's no reason to overexpose. I'm saying that while I have other pairs that overlap, but there's no reason to overexpose, and I don't see, an immediate great opportunity. I mean, obviously, you look at this and you're like, oh man, it's been going up for all these days, but it's much more likely to be caught by the tide of this humongous trend heading down than it is to continue going up. So if I happen to look at this and I see a breakout to the downside, and I see the Ishimoku cloud turn red, maybe then we'll enter into it. On AUD USD, I just don't like that. I just don't like that. It just broke out, and now it's struggling at the top of the breakout, meaning that, you can buy and pretty much hope that this breakout is a real breakout and continues up, or you can short, and shorting would be going against the general trend. So the probability is just low. I'm not betting on that. I said I wasn't going to go through this stuff, and I am. I love the markets. What can I say? Anyway, 13 minutes. 13 minutes of the video. That's not too bad. So GBP USD, actually that looks like something you can pretty confidently short. But again, I'm not going to go against a trend that's been developing since the middle of November. And, maybe for you, maybe you're a wild man and you're okay with doing that, but it's been clearly going up. And despite it, breaking out, looking like it's developing a downtrend, a double break here, 2 breaks to the downside, I just rather not. We'll allow that to develop a little bit before we join in. We'll allow it to develop a little bit. Looking at NZD USD, boring, nasty, big downtrend. A very large pullback to pretty much the 50% mark. If we had our Fibonacci retracement, or we use the Fibonacci here, it's pretty much the 50% mark, which is usually where things turn around when they're doing retracements. So it makes complete sense that this thing is now rejected and going in the other direction. Again, though, if you short and agree with it going in that direction, you're ultimately going against a trend that has been developing since the middle of November. So it's two things. It's too probable for both sides to be right. It makes too much sense. There are too many arguments for both sides potentially being right. And the USD JPY, I've been burnt on this one many, many times before. In terms of something that is just trending up outside of XAU USD, I do think this has the highest probability. We saw a break above here. It couldn't get above here, but it's heading back up to those heights. So even if it was just a scalp, a buy from here to here, how many pips that is actually, if that's even worth it. It's really not worth it. It's really not worth it. No, there's I don't know. I don't think that's enough reward for the risk of wildness that can happen as a result of playing around with USD JPY. Like, for example, look at this gap. You know how gaps are always supposed to be filled? Yeah, it never got filled. It never got filled. You woke up with a trade that you kept open overnight, your account's gone. And the gap never got filled because the Japanese banks just decided to do something. There you go. Anyway, because of that, I'm not going to play around. I saw that they were easing. They were doing some quantitative easing in Japan at the moment, the Japanese banks, but I don't trust that. I don't know. It's too many unknowns for me to get into that, especially considering we already have, 5 good opportunities to look at for the week. Again, if one of these other ones provides something that we just can't pass up, well, maybe we'll do it. But for now, I'm good. I'm not supposed to be doing this, but Bitcoin, let's see. I saw some news that it's back above 90,000. Okay. I mean, you look at this on a daily. This little pullback is absolutely nothing. It is a very large pullback, almost as big as the one that happened back in 21. But it's really not that big of a deal. It's definitely time to buy Bitcoin if you have some money to just sit and you want to own cryptocurrencies. But I'd say go for Monero anyway. Look at the macro E-mini, S&P 500. It's doing what it does, right? It's just continuing on up at a consistent rate. It'll see 8% at the end of the year or something like that. Of course, the year just started. And Meta. Meta's been in a weird position. I don't know why it's been downtrending, or it's had such a large pullback, considering the Ray-Ban glasses part 2 were out, and they seem to be doing pretty good. And yeah, I just don't understand really why Meta is trending down. No, Nvidia isn't. I know Palantir should be going up since, the war in Venezuela. Defense stocks always go up once people are afraid of or think there's a potential war around the corner. But yeah, that's it. That's it for the analysis. If you want, or even if you don't want, I'll probably be uploading videos of me actually trading these throughout the week. The best trades, possibly, if I forget, just me closing the trades, whether they be win or losses, my current account balances. Don't say anything about me being under leveraged. I'm extremely under leveraged. I know that's not how you trade prop firm challenges, but that's the nature of the beast. Prop firm challenges are only the beginning. I want much, much more. And that requires me being extremely intelligent with people's capital rather than just risking it all, even if it's just a virtual account. That is all. Y'all have a good